Hey, what's good, everybody? Welcome to the Closing Beat. Happy Monday. Hope you're having a great day here so far today. Got a little something new for you, I want to get you guys engaged in your investments. I want to get you interested in tracking your investments, good or bad, as things happen, up or down. So we thought about doing a game for customers, and I said, you know what, let's make it available to everybody. Let's have a good time. So bottom right-hand corner of your screen, if you go to jazzwealth.com/guessthedow, we're going to give away $100 a week to whoever guesses the closing price of the Dow, closest without going over, and we're just going to see what happens. We'll have a good time. I did this in the past just for a little bit, but I figure let's give it a shot and see what happens. Now, this is not like a marketing thing. I will not spam you. We won't send out one single email to you. No marketing, no phone calls, no other spam emails. We don't sell your emails. Just the only email you'll get is if you won. We'll announce the winner each week here on the Closing Beat on Fridays. All the rules and everything are on the website there, but I hope you'll take a chance to register there. There's no catch, there's no purchase. You don't have to open an account with us. Just play along. If you want to play along, that's great. All the rules are in there on the website. And if you're one of our customers, we actually just credit your account the $100. So you could win $100 a week if you are the closest. And you got to imagine these first couple weeks, people are just going to be finding out about it. It's probably not going to be a lot of guesses. So odds are probably on your side. And also, seriously, no spam, no garbage like that. We're not going to play games like that. Not going to sell your emails, no nothing. This is just a fun game, and it's all spelled out very clearly that we will not be playing games with your emails or your information. All right. If you happen to want to open an account with Jazz Wealth, that's cool too. And if you win, just let me know that you have just opened an account or whatever. We can credit your account as well. Otherwise, I'll send you an email, ask for your address. We'll send you a $100 gift card unless you're one of our customers. You want me to credit it to your account. Also, let's go over to the dojo here real quick. We've upped our game a little bit, right? If you're one of our customers, you have access to this. You can come in, have a good time looking up your different stocks. But down at the bottom, we changed the news feed to be a little more relevant. Things that we're looking at here, some helpful educational news articles and everything. So this is it updates in real time. It's going to be a lot better in here compared to what it was. It was kind of random and everything, so we really dialed it in for more news around the S&P, the Dow, educational things like that, so feel free to dig around. Also in our video library, you guys know this, you can see all of the classes that are for our customers only. We continue to expand on this. This week's class, by the way, will be on the portfolio and stock market update. If you've never seen us do one of those before and you just joined us here at Jazz, you don't want to miss it. It's kind of my chance to stretch out and really share some detailed information with you, so I hope you'll check it out there. That's all I have as far as marketing goes for the day. Let's take a look at the markets today. If we go over here on the right-hand corner of your screen, you can actually see the Dow finished the day positive. Lights are still red because that doesn't count. That's not enough to, seriously, that's not that positive. S&P down 7, the NASDAQ down 120. Remember, I say always look at the markets there and you go, if they're not basically trading around the same, ask yourself why. What happened? Why is the NASDAQ down so much? Is it that the other two indices should have been down more and something supported it? Or is it the other way around and the NASDAQ was lower because something was beating it down? And to be honest with you, the NASDAQ got beaten down pretty hard today. We're coming off the worst May in 17 years now. The market's just sold off for the entire month of May. We started off this week, today, with at least a little bit of an attempt at a rally. I actually kind of like what happened today, minus a couple things, so we'll go over that. But the NASDAQ down basically just clobbered here today, all really because of tech and communications and really just because of a few different names. Overnight, you had China come out with a 23-page document saying how it's the U.S.'s fault that we couldn't actually get a deal done. They said the U.S. backtracked on the deal, and some of the comments in it, if you read it, it was printed in English as well as like 8 other languages. They said that the U.S. is impossible to negotiate with because that you give them an inch, they'll try to take a yard. That was their actual, they didn't say mile, they said yard. It was translated as a yard. So I thought that was interesting. So a little down day here, but I really think aside from a few different areas, the market was really trying to turn positive today, at least for a small rally. Now, the Dow was a little bit positive on the day, which is good because this is now could be the 7th week in a row that the Dow has been negative. We gave you those stats on Friday to say there's only 7 times in history that the Dow has lost 7 weeks in a row. And Dow, that's going back to 1900. So that's not like we're only covering a couple years or whatever. That goes back to 1900. The good news is that it's only lost 8 weeks in a row once. You got to go back to 1923 to find that. Anyways, the NASDAQ was the big focus today. That's not a good day for the NASDAQ. If you're tech heavy, you took a little bit of a beating today. If you follow the NASDAQ futures, 6850 is the 50% pullback there. We're working on our way down to that point. A lot of it was just because of a few names. Amazon clobbered today, almost 5% lower on the day. Facebook really took it hard, 7.5%, all the way back to the 200-day moving average. If you've been looking to buy Facebook, though, you kind of like what happened. I mean, you don't like the news or anything, but you know, it's kind of cool to get that out of the way. Anyways, 7.5% discount there. And Alphabet, both classes of stock there, really hit hard today. It was all regulatory stuff, just antitrust. We'll go over all those different things there, but regulating the tech sector. And so the big tech stocks took the hit there, and that's that one. If you look at the different sectors at the bottom here of the dojo, communications services, that's the big bulk of it. That makes perfect sense if you're following, because Alphabet, both classes of the stock, and Facebook make up over 40% of the communication services stock. So when those two have a bad day, it's going to drag the tech sector down. The XLK may be something you're used to looking at. This is just a broad-based technology fund, but like Microsoft and somebody else, they're at the top of the list. So it didn't get hit as hard because Microsoft didn't have as bad of a day. If you look through the other indices, you can see an attempt to rally here. We don't even have to start at the top. Look at healthcare, attempted to rally, really trying to work its way out of this downtrend here. Industrials and transports tried to rally, got about a 1% rally on those there, so pretty cool if you ask me. Semiconductors have every opportunity to be red day after day after day, and they've sort of stopped that. That doesn't mean I think it's going to bounce or anything. It just means for now, the selling pressure has stopped. People feel like this right here is fairly priced for the semiconductors, so kind of interesting there. Before we go on to the sectors, I'll say this week, we mentioned on Friday that the Fed had a ton of speeches scheduled for this week. This week is their opportunity to say something that makes people feel like maybe they will cut rates, or sort of confirm that they're at least watching and they're open to the idea of doing that. There are actually, including today, there are 13 different Fed members speaking this week. So, usually 1, 2, maybe, a conference or have a scheduled speech somewhere. There's 13 of these suckers that are out there speaking this week, so you know that's going to be a headline. Today there were 3, Williams, Powell, and Bernard, I can never say his name, Brainerd. They were out speaking today, I believe. No, that's tomorrow. They did that tomorrow. So today we already had 3. Tomorrow we got another 3. And so that could definitely be a headline news event right there. So you want to keep track of that if you're paying attention or care. In the S&P 500, 10% of the S&P 500 is down 10% or more. Does that scare you? Because to me, it doesn't sound like a lot, right? For the year. So 10% of the S&P 500 is down 10% or more on the year. Over 50%, I believe it's 51.2% of the S&P 500 is up 10% or more year to date. So it lets you know that there's a lot of strength out there that's temporarily discounted. Those of you that like to buy pullbacks in an uptrend, this is your year. I mean, this is what we're staring at here. We have 28% of the S&P 500 stocks are still above their 50-day moving average, so that helps you further narrow your potential universe if you're a stock picker out there. And the sectors, by the way, that have the greatest number of stocks over their 50-day moving average is consumer staples. That's going to be your biggest one. Nice rally today, trying to come back from that. And utilities. Not utilities, real estate. You can use any real estate. I'll use FREL or something. There you go. So remember, last week, those were the ones that had been strong, but they took a little bit of a beating there. So those two sort of help you further narrow your focus there, if that helps you. Oil was a big focus today. Overnight, oil opened up. It was down about 1.3%, was kind of frozen for a while, and then overnight you had the Saudi oil minister had some comments, blah, 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 and it helped the markets rally into positive. So we started the day with a positive price in oil, energy, everything looking good. It wasn't enough. It sold off through the end of the day, basically retreated back to where it started, very extended here in the short term, if you like that sort of thing. I know I'm jumping around a little bit. In the S&P 500, you had 15 new 52-week highs, all the usual names. You had 19 new 52-week lows, lots of usual names in there that we've been seeing. But remember, there was 54 52-week lows on Friday. So I know that was a bad day and everything, but hey, still, that's not so bad. All right, sector-wise, you got communication services. We talked about that. You got tech stocks, same thing that we talked about. You have, from last week, utilities, which took a little bit of a beating. They actually kind of held up today, trying to rally a little bit. They were down. Utilities lost 2.79% last week, all in 1 week, which is odd for utilities. That's a slower moving sector if you're not familiar with it. And then consumer staples, there you go, had been holding up through all this mess, all this pullback, and finally cracked towards the end of May there. That had a decent rally today, I thought, as well. It lost just about 4% last week. And that is also your biggest mover from last week's highs to lows. So the sector that had the biggest trading range was utilities and consumer staples. If you look at bonds, the 2-year and the 5-year traded about the same all day long. A lot of, I don't know if you care about that, but that was kind of interesting. And yeah, that's basically what I have for you, although a little bit of all over the place. Let's take a look here. We got a list to take a look at Amazon. So we talked about the shares being lower here today. Amazon down on the day, breaking through the 200-day moving average. Washington Post says that the company may be subject to some heightened antitrust scrutiny. Those were their words on that one. So Amazon taking a hit. That didn't help the tech stocks as well. And then you go over to Google. Oops, that's not the symbol. You go over to Google. There you go, 6.12%. I'm sorry, Alphabet down because the Wall Street Journal says the Dow Jones is the Department of Justice is looking into the company also for antitrust violations there. Not really good, right? So not helping the tech stocks overall. Let's take a look at some of the different areas here. Try to get this back up. Did it work? Yeah. Broadcom had a little bit of a rally, at least to start the day. It did sell off at the end of the day. That was in Barron's over the weekend. You know, on Mondays, I usually cover what Barron's said because they're real popular for trying to grab your attention over the weekend. They take a different approach. They do stuff during the week, but over the weekend, when everyone else, like Bloomberg and CNBC and stuff, they calm down, Barron's tries to get in there and grab your attention, and it works. They said Broadcom that it should be bought on this weakness. Their words, not mine, ticker symbol AVGO if you want to look into it. Boeing, more questions about some bad parts on their planes, 300 parts, I believe, different parts. So FAA had some bad news there. Beyond Meats, do you like this overpriced stock, Beyond Meats? Did you see what happened today? Down almost 8%. Remember, there are an incredible amount of traders that are short, paying unbelievable rates, interest rates to short this stock. It's a very hard stock to borrow, at least it was. And Barron's came out this weekend and they said, all the growth prospects, every ounce of growth that you guys are expecting out of this stock is already priced in and then some. So that didn't help the price Beyond Meats today. It's overpriced. Simple as that. I don't have anything against them. It's just technically, it's just overpriced right now. That's it. That's fair. O'Reilly Auto Parts, this is a store. They sell auto parts. You go in there, you buy your batteries, whatever. They're going to buy back an additional $1 billion of stock. Stock buybacks gone crazy. Whether you agree or disagree, they're still out there. That's what's going on. All right. Other than that, tomorrow we got earnings from Tiffany, GameStop, and Salesforce.com. Salesforce.com will likely be the one that grabs all the attention and gets the headlines there. You got 3 Fed members speaking. You got Baird does a consumer conference coming out tomorrow. And somewhere, is it Jefferies? There's another healthcare conference coming up, which is pretty big. It's the Jefferies Healthcare Conference. Comes up tomorrow. So if you're looking at the healthcare sector and you're like, come on, remember, healthcare is the worst performing sector in the S&P. If you're looking for some juice there, maybe some news comes out of that. It has been known to be a market-moving conference, so we'll see. And where are we at here? Gold, sharp day on the day. Very nice day for gold, actually. Gold mining stocks. We talked about that on Friday. And dividends, you got Schlumberger, Nielsen. Schlumberger 50 cents, Nielsen 35 cents. It's X date for those, if you own those 2 stocks. You're looking pretty good there. Yeah, if you have any questions, I will be happy to try to take a look. Gold, you could use GLD if you like looking at the ETFs for gold. It's just an easy way for me to pull it up there. Another strong day for gold. Basically anything related to it, whether you like the gold miners, junior gold miners, however you like to look at it. Very strong move here off this area here. You caught a lot of people off guard because they all wanted this 19 to 18 area. They didn't get it. Now they got to chase. Anytime someone's got to chase a stock, and you add a little fear into the market. That's not a bad thing if you're a bull. The Russell 2000 even attempted to rally today, about 0.5% on the day. So you can't argue with that. It's all good stuff. Besides some of these massive tech companies, you had financials, regionals, retail even trying to rally today. So it's a good sign if you really want the markets to bounce. My personal hope, and I know this isn't going to be easy on anybody, but my personal hope is that the S&P 500 sells off back really, I hate to say it, closer to like 2650, really scares some people there and spends the summer sort of drifting around there. Then we get a rally late in the year. That's what I'd like to see. I mean, I don't know that I get what I want, but it's what I would like to see. So anyways, that's all I have for you. Let's see. Kevin says, why don't you show industrials? Why don't I show them at the bottom? We use the XLI for that one. So I'm not sure what the... Oh, why don't you show industrials at the bottom? I see what you're saying. Yeah, we could. Yeah, we could. Just to break it down even further, if you like. I don't like some of the ones at the top. I mean, sometimes they come up in the news, like natural gas was in the news for a while. Some of them we just don't talk about a lot. I'd like to change those out maybe. We'll see. Yeah. You like the gold miners? Nice, nice. The question is, are tech stocks still overpriced? In the short term, they're still oversold. Now they have held up. They're the second best sector in the S&P as far as holding up recently, from last week to this week so far, holding up and not selling off anymore. So they seem to have sort of stabilized in here. I'm not saying it's a bottom or anything, but as far as the sectors that have held up the most, the first is materials. Basically, last week it was sort of held tight. It was able to hold off some of that weakness, and technology comes in second. I can't say if it's a bottom or not, but I can say it's discounted. Yep. With all the buybacks, is there something they know that we don't? No, it really isn't. I mean, it's just their decision of what they think the best use of their capital is. It will help it's sort of tricky, but everybody knows it, but we still respond to it. It's kind of weird. It'll help their earnings per share look a little bit better, help sort of fuel the late stage of the market cycle. I don't know how else to say it. So you see a lot of that late stage. Historically, companies overpay for their shares, but it's still well worth it if you approach it from a fundamental level. And also, it may have, like, the more Bernie Sanders gets attention, which he's been sort of quiet lately, not getting headlines there. Him and a few other Democrats, I believe, want to stop the corporate buyback thing, or at least restrict it. So if you see that commentary, you start seeing more and more going, well, we were going to invest in new machinery or whatever, but we better take some of that money and buy back our shares. That'd be helpful for the future. It's just an individual decision there. Dustin, I like that name. In a recession, doesn't everything stay oversold for a long time? Actually, this is sort of a mistake that a lot of people have here. A lot of people, and I get it, we can just interchange the words, but a lot of people will say, Dustin, if the market is heading into a recession, should I sell my stocks, right? I know you don't mean to say it that way, but technically you're not using the words right. The stock market can pull back and does pull back way before a recession, right? A recession is an economic definition that's derived from the GDP numbers. So we have at least 6 months before we can identify a recession. I believe it's even longer than that because we just had the GDP numbers come out. So it's a lagging indicator, right? The stock market's always going to lead the way. Likewise, when the economy gets back on track, gets back into some kind of growth mode, the stock market's already recovered. It's long recovered. I did a video on that a while back to show how if you wait for the headlines to say, we're out of the recession, you're 6 months too late, and the stock market's already rallied. So I know, we're pinching, splitting hairs here or whatever, but your question was, do stocks stay oversold for a long time? Absolutely not. You have the initial sell-off that I believe it was a 8-month average, right, where the markets sell off, and then you have the stock pickers come in. You have the fund managers that still need to outperform, right? They've got to deliver for their customers, so you find these little sectors that start recovering little by little. It's part of the reason why we're so diversified here at Jazz Wealth. A lot of our mix of funds, we'll put everything in there. Number one, it doesn't cost us anything, and number two, when the market starts to recover, we could just balance out. Instead of going and buying all these stocks, we could balance a little heavier as needed. A lot of you haven't been through that with me, but as the time comes, you'll get to see exactly how it works, because we show every customer how the hot dog's made. I think I'm going to use that more and more. Do you think June will be better than May? We're going to cover that on Thursday for our customers in our portfolio update. June is historically a rough month. I'll give you that. So heads up. It's historically a very rough month. Out of the summertime, it is the most volatile month, by the way, if that helps you. Yep. And financial investors got it right. Yeah, some stocks never recover if it's a deep enough pullback into like if we call it like a great recession, because they don't want to call it a depression. Some stocks do disappear. Yeah, that's a very good point. Yeah. Can you do a video about who pays the tariffs? We're actually going to find out this earnings season here. This will be the first opportunity to see that we are paying for the tariffs in a roundabout way. Doesn't mean I'm against them, but overall, we are paying for them. And when the earnings cycle starts over again, we'll cover it one by one, just so you can see from retail to all the different companies that import things, and global companies as well. Yep. Spearhead says, my boss got scared and pulled from the market. Now, the problem is if your boss is right, what if his timing is perfect and the market crashed from here? Now you're going to really second guess yourself. The real problem with that is if he is right, it's pure luck, right? I mean, good for him, of course, but pure luck, and to do that on a repetitive basis would be very difficult instead of just buying the discount. Now, if he's the kind of guy that says, I saw the market fall and I want to buy some of that, that's not bad. I wish him well. Yep. Yep. Matthew, can companies doing buybacks offer those shares again? Yeah, they actually can. There are different clauses as far as how they buy back and what they can do with the buybacks. They can actually buy back shares and still count them, although almost nobody does. They can buy back shares and shelve them. I forget the word for it. I'm not that geeky with it. They can shelve them and pull them back. They can do offerings in the future for more than what they bought back. Although there's really no regulatory rules on that, a lot of times the company's board of directors will have put together what they can and can't do. You're getting deep there. That's a really interesting read. I would read up on like Caterpillar, what they can do, versus someone like Under Armour, right? Big difference in what they can do. Yep. Making the sausage. More of a hot dog guy. Yeah. Have you heard much on a percentage chance the rates will drop in November? Well, let's see. Currently, traders are factoring in before September an 88% chance of the Fed cutting rates, quarter point. That's where we're at right now. We'll see. I mean, that changes on an ongoing daily basis. But for now, it's getting real heavy where traders are saying, you're going to cut, right? If we could get something out of the Fed this week to even throw them a little bone, there's your market rally, at least in the short term. So if you had to pick one thing that could cause a market rally this week, Fed. And it's only because they're out in force, not because you want them to save the day, or I think they talk too much anyways, but the Fed. They're out in force this week. We'll see. How low can NVIDIA go? That type of decline, let's see if I can show it. This type of decline can just go and go and go. This is a straight line decline. Nobody's panicking. Everybody's just slowly selling, right? Until you see some panic, this can go on. I mean, you can look at support back here and say, 122, 123, somewhere in there. This sort of thing, very tough to pick a bottom. You never, ever, in my opinion, want to try to guess the bottom of a stock that essentially looks like railroad tracks, right, on the way down. Just a straight, clean pullback. I don't like that. Yep. Harry likes Apple at 80. Man, you keep lowering your target, man. Moving before long, you're going to have Tesla at 80. Tesla broke down again today, back to 175. That's getting interesting there. Yep. Seems like a lot of companies are getting investigated or sued this month. It's pretty much never ending, but when it's a headline company, when it isn't Alphabet and Amazon, and it's going to get worse, by the way, guys. It's not I'm not hoping this to happen to these companies. It's all political. So what's happening right now is all the politicians, everybody, is testing the waters. Where will they get public response? It happens every election season. They look what Bernie Sanders did. Healthcare for all. He tested it and he backed off, right? He's still going to go for that. He's not one to change his mind, but he backed off. He actually said the other day, prostitution should be legal. Let's just legalize it, right? He backed off. It didn't get a lot of press. I don't know if it's time, right? So all these investigations, what's going on there, all the politicians want to attach their name to whatever gets the most attention. They want to be the one that said, I spearheaded this thing, I made it happen. So you're going to see a lot of that. They'll cover all their bases, and eventually that'll build each politician's platform, and you'll decide, whatever you decide, whether you agree or disagree with them, you'll at least know what their platform is. That's why you can't see, like Howard Schultz from Starbucks. We have no idea what he even cares about. He's just out there trying to get attention and see what he can get attention for. It's just the way it works. Not bad, it's just, that's the system. Yep. Dustin's is send out the towels. We have literally hundreds of towels. Yeah, so I don't think it's time yet. I would not start waving. I just, I teased it the other day, but look, it's 7% pullback, right? We went through October, November, December. The market's pulled back over 20%. All right, I know some people are going to need some towels then, but we'll see what happens. Yep. And also, financial investor, there are over 500 electric car companies in China. New companies, like NIO, but 500 times. Same concept and everything. So there may not be a lot of competition for Tesla right now. I know they're building in China and trying to do all that. You can talk about a bubble. You got 500 electric car makers. Come on. Gives you an idea how big that country is. Yep. Ashish, welcome. Dustin, thoughts on algorithms controlling the buying and selling? We've been having sharp rallies and declines. Is there any algo patterns that have been studied to get an advantage? You can follow them. I know day traders that actually follow them and will test them. It's more popular in the options market because you can see faster what the algorithms are doing. Give you an example. If you're thinking about selling a put, you can sell a put at, let's say the bid is $1 and offers $1.25. You can go $1.01 just to see if the algorithm moves on the offer. I said that backwards, but you get what I'm saying. In the day trading world or in the stock world, so many shares changing hands so quick. It's very difficult to tell these days with the amount of volume that comes through. There are a lot of algorithms. We use a bunch of them here to get your orders filled. So, I know how ours work, but, as far as other companies and stuff, that's a hard one to dive into. I don't have a great answer for that one. Mr. Hightower, I'd like to get a loan. I think you're misunderstanding what the company we do here. Cool. Tesla's their own competition. That's not a bad comment. Tyler says, what do you think about Chinese stocks that had been hit by the tariffs? Alibaba 10 cents. Yeah, it's not over. There's going to be a lot of drama, a lot of back and forth there. It's a news-driven area. I tend to want to stay away from that because I don't want to guess the news. I want to invest in earnings. I want to invest in growth, as long as that's the goal. So I don't like that. That's why I stay away from biotech stocks. So you're in for a ride. I don't think the volatility's over there. Ryan's right. NIO doesn't even build their own cars. When they went public, I remember sitting here going, these guys don't even make a car. We could start our own car company and slap our own logo on it and claim a valuation of the ridiculous that they did, and that's why they're trading where they did. Michael says, do emerging markets outperform U.S. markets on a regular basis when U.S. markets are down? Had you not added the last part of that, I'd have been able to answer your question. When the U.S. markets are down, do emerging markets outperform? I wouldn't think so, but I don't actually know that one. I've studied emerging markets long-term versus U.S. markets, and of course all of our different indices just to see. We've done numerous videos on that, but when the U.S. markets are down, you just give me a new idea there. Thank you. I love it. All right, well, that's all I have for you today. If you want to play a game, seriously, no catch, jazzwealth.com/guess the Dow. Maybe we'll call out your name. I swear to you, there's no catch, there's no spam, no marketing. Let's just have some fun. I just like interacting with you guys. If you want to take your shot, the way it works, by the way, is you're guessing next week's closing price on the Dow. So you have until this Friday to get your guess in for the following Friday. All right? So there you go. All right, enjoy the rest of your day, guys. I'll talk to you soon.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.